Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday and we have our regular guest, David Kuo, founder of the Smart Investor, coming out of Singapore as our guest today. Now, David, thanks for coming on the show yet again.
Selamat tengah hari, Brian. And once again, you bring me on the show just after a day of turmoil. Yeah, I mean, for goodness sake, people are going to associate me with bad news all the time.
Well, actually, the markets don't look so bad today. But let's take a look at, before we get your insights, let's take a look at how markets have performed. We start with Bitcoin, which is at 19,597. It's up 4.42%. Ethereum is up 4.51%, and it's now at 1,341.86. If we look at regional equity markets, we start with the Straits Times Index, which is up 1%. Bursa Malaysia is up 0.24%. Shanghai is up 0.32%. The ASX All Ordinaries is just shy of 2%. It's at up 1.99%. The Nikkei is up 1.03%. The Hang Seng is up 0.94%. And rounding up the numbers, we've got the Kospi, which is up 1.21%. So today, after the bloodbath yesterday, today is a sea of green. Tell us why, David.
Well, I wonder, how much of this is actually due to short covering. And for those people who don't know what shorts are, this is when people start selling shares in the market. They borrow shares from somebody who owns the shares. They sell it in the market and hope to be able to buy back those shares when the share price falls. And then they return the shares back to the lender of those shares in the first place. And in between, they make the money. But, last night on Wall Street, the three stock market indices shot up, primarily because bond yields in the UK came down very significantly, having shot up the day before. So I think it just goes to show how interconnected these markets are. But I think, this rally that we're seeing today in the Asian markets could be fairly short-lived, because it's already indicating that on Wall Street, the futures market would seem to suggest that maybe, that rally that we saw last night on Wall Street may be short-lived also. But I think people need to be very cautious about what is going on, and rather than do cartwheels because the stock market has rallied today in Asia, I think the long-term trend is still going to be down rather than up, Brian.
And so I want to point the audience direction to an article that you just wrote on the Smart Investor itself. And it points to bizarre behavior of financial markets. Now, why some investors are looking at markets with rose-tinted lenses, despite all the evidence pointing in the other direction. So could you give us some insights into your thoughts on this matter?
Okay, I'll make it short and brief. Ultimately, I'm kind of shocked. Not shocked by what is happening in the market, but shocked by the fact that people are shocked at what is happening in the market. And by that, I mean, the three indices in the US are in bear market territory. And then we also have what is going on in the UK. We saw the pound crumble primarily because of that preposterous budget that was announced by the Chancellor of the Exchequer. It was a giveaway budget, so much so that even the International Monetary Fund, the IMF, rebuked the British government for this unfunded giveaway budget. I mean, normally the IMF criticizes the emerging markets. They don't go and criticize G7 nations, countries that are supposed to be fairly stable. And so what happened was that investors in British bonds took fright. They sold the bonds off very sharply, and that resulted in a spike in interest rates in the UK. And it required the Bank of England to step in and calm the markets, because ultimately the pension industry was creaking. And they were saying that you can't do this. You can't have bond yields that shoot up 100 basis points. So what then happened was that the Bank of England stepped in, buying bonds, doing exactly the opposite of what they were supposed to do, which is sell bonds. And then that calmed the market down. And when that calmed down, what happened in the US was that the bond yields also came down in America, and so the stock market rose. But ultimately, the trajectory for interest rates is going to be higher. And I think, this is only a temporary measure from the Bank of England to try and stabilize things. But it can't keep on doing this, Brian. And what I worry about is that when I have a look at what's going on in the market, we're seeing bond prices coming down. We see stock markets coming down. We see currencies, many currencies around the world coming down against the US dollar. And the one asset class out of the four that hasn't really sort of corrected yet appears to be the property market. But I think, except for certain areas, I think that property prices are going to come down, because ultimately, when you push up interest rates, it's going to drag down asset prices, which is exactly what it has done in terms of the currency markets, in terms of the bond market, and also in terms of the stock market. So what I'm trying to sort of suggest to people, or trying to impress on people, is that property prices are going to come down as well. And don't be shocked when it happens. And only be shocked when people are shocked that it's happened, because interest rates act like gravity on property prices, on all asset prices, and they are going to come down, Brian. So don't be shocked when it happens, but be shocked when people say, oh, I'm shocked because my property has actually lost a certain percentage in value.
And here's the thing, David. So in highly leveraged markets like Australia, for example, where mortgages and homes are a big part of the overall economy, households are already stretched. And when by far we have a lot of runway in terms of interest rate rises. So what you've just alluded to and basically prepped everyone to is really going to happen even in markets like Singapore.
I think so. There is nothing more leveraged than the property market, because, who in heaven's name has $1.5 or $2 million in their back pocket and goes, oh, I want to buy that property because, I got $2 million to spare? People have to leverage in order to buy that property. And what then happens is that, okay, it's fine if you're able to fix your interest rates for a certain period of time. But when that fixed period ends, then you're going to have to renegotiate, and you're going to renegotiate at a higher rate of interest. Now, some people will be able to see that on the horizon and say, yeah, when my fixed rate mortgage ends in 6 months or a year's time, I'm going to have to pay a higher rate of interest. I can't afford that higher rate of interest in 6 months' time. So what do? Well, I'll maybe sort of hang on for the moment, but then I'm going to have to sell that property because I cannot afford those penal mortgage repayments. And so once one person gets out, then another person gets out. And before we know what's happened, we'll have this stampede to the door, with people shouting fire. And you suddenly find that the door is closed because there are no buyers out there. And that is what I'm trying to impress upon people. There are ways around it. Pay down your mortgage as much as possible so that you don't fall into this negative equity or this loan to equity ratio, that is imposed by certain banks who say that I lent you a certain amount, believing that property prices were either going to be stable. But when property prices start to come down and your loan is actually sort of breaching the rules that we had in the very beginning, you're going to have to sort of top up the amount of money that you have borrowed from the banks, because they're no fools. They're not going to sort of say, that's fine, David, that's not a huge problem. We'll just ride this out. They're not going to ride it out, Brian. That is the problem that we have.
Now, David, on that scary note, thank you very much for coming on the show.
Okay, you're welcome. I'll scare you anytime you want, Brian.
We've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.